What's
All
good?
right, Mornings with Bill, CFO calculation workshop. Got it done, got it done. You know, I was up like 7:45. I'm saying, oh my God, I said a prayer. I get nervous with the technology, you know what I mean? I've done stuff on Zoom before, but
What the hell's going on here?
Wait a second. You were up at 7:45? That's a half hour ago.
oh God, I was up. Are you kidding? I got up like, must have been 5:30. You're like, once I get up, I'm up. I can't get back to sleep. So I got to take a shower. I got to get dressed. I got to, you know, we were on the computer yesterday and we had trouble getting on with, I don't know, my wife's telling me there's something going on with Optimum. I don't know. You don't know. And then how do you fix it?
No, it's a risk. Yeah.
I don't know. But what I'm planning, Jared, this is what I'm going to do this morning. I got like 9 different types of calculations, just to go over different things. So, I'm going to talk a little bit about state tax appeals a bit. So kind of go through some calculations there. So I just picked like 9 calculations, trying to do like 5 minutes each because we only got 50 minutes.
Right.
So, some of these might be basic, but I think there'll be a good review. And, we'll talk about state tax court judgments, the interest, which we just learned. I learned something from Melanie yesterday that they just changed the law on that with the 5% interest calculation. I think there's a floor of 1% tied into the prime, so I'll mention that. We'll talk about county court judgments, tax rate calculation, 1 tax point. We'll look at the RUT and percentage of collections received from delinquent taxes. So as we kind of go through this, I'll be flipping between, some of the schedules. I got all the numbers on the schedules, so we'll go through that. So this is kind of what I wanted to kind of accomplish as just some calculations, and that's kind of my game plan.
The 50 minutes is a absolute hard 50 minutes because
I know.
The other, you got to get off of this onto the other link.
I know.
Yeah, I don't want to run over. So,
but I'll keep it moving. I'll do the best that I can. I'll keep an eye on the time because you gotta. I understand. You got to come back out and then go back in and find that other link and then open that up. So totally understand.
And those who aren't in this session don't know who they would be, but they'd be waiting for us. So So Angela is our host. Angela's on with us. Good morning, Angela.
Good morning.
So
hey, Angela, how's everything going? All right?
Good, thanks. How are you doing?
Good, doing fine. I'm just happy that everything is up on the screen and it looks good. I've been sitting watching the screen since 7:45.
All right.
Wait for your host.
Oh boy.
Yeah, I'm like, I want to, you know what it is? Because I'm a little nervous with, if there's a glitch, I got to make sure how else can I get in? You know what I'm saying?
Yes.
And I don't like to leave it to the last minute. So,
Well, Angela's going to send a 5-minute warning in the chat box if you notice it. If not, I'll chime in and say, hey, got 5 minutes, whatever. Halfway through, there'll be a poll question. So I'll also jump in and try to find a good break. But so there'll be 2 disruptions.
It's okay. You do whatever. You jump in whenever you have to, Jerry, and jump on whenever you have to. And I can see the time at the bottom, so I know 9:30.
So let's get rolling. Let's let them in.
Perfect.
Okay, so I can start.
No.
Now you tell me when to start. All right.
Start. Let's let some people in first.
Okay. All right. I'm not into the.
Yeah, we're up to 79. Going to break 100 soon. All right,
102. I see it. 103. 111. Wow.
Yesterday morning we were in the 220s. Yesterday afternoon we were around 200. Couple drops.
I didn't catch the yesterday. I had to take my wife to the doctor yesterday afternoon. She wasn't feeling well, so I caught all the morning ones.
We are on the air right now. The 162 people are on or listening to us. So
All right, so I'm ready to go.
not yet.
Not yet. See, I'm anxious, Jerry.
Just load the room first. We don't want to deprive anybody of
All
1
right.
minute of
Well,
your
you let me know. I'm not going to say anything until you say go.
I just want to make sure we give everyone a chance to get in. It's 8:31. Let's go at 8:30. Well, it's 8:32. All right, we got 166 people on. So let's give it a start. Now, yesterday I said see everyone this morning to do breakfast with Bill and do some journal entries. I was mistaken. Even better, we're going to do calculations. So what a way to wake up. So Bill Homa, past president, really needs no introduction. If you don't know Bill, you haven't, I don't know, haven't been around.
Been around too long.
Open your eyes. Yeah, we've both been around too long.
Tell me about
Here
it.
we go. You're up.
All right, Jerry, thank you. Good morning, everyone. Good to see everybody. I wish we were down in Atlantic City. I'd be looking you straight in the eye. And, when I was the president of GFOA, we always did an early bird seminar and a twilight. So we always try to keep the early bird going. But what I want to do here is let me jump in because I got 15 minutes here, gang. This is I decided to do kind of a CFO calculation workshop this morning. And I picked like 9 different type of calculations we're going to kind of run through this morning. We'll have all of these up on the GFOA website after the seminar, after the conference. We'll look at some tax appeal refunds on a New Jersey State Tax Court judgment. How about the interest calculation, county board judgment? How about we do calculation of a tax rate, which we should all know, calculation of one tax point. Look at the RUT, percentage of collection, receipts from delinquent taxes, and emergency appropriations. So we got kind of quite a bit to cover in 50 minutes, and that's what I kind of decided to do. So we'll do the best we can getting done in 50 minutes. So the first one that I picked on, because I'm also the tax collector in my community. I work for the town of Cedar Grove. And how about we look at a refund on a state tax court judgment, okay? Here is an example that I do have is, suppose for 2019, the original assessment was 161.3, and it was reduced down to 119.3. So the overall reduction was $42,000, and I just picked a tax rate of $5 per $100 of assessed valuation. So the amount of the refund for our tax appeal judgment, if we did the calculation, the reduction was, if the assessment reduction was $42,000, divided by 100, times the rate of $5, the amount of the reduction would be $2,100. Just some things that I do want to mention with this is that anytime we do get a state tax court judgment in, just some good internal control procedures would be, whether it's a county board judgment, state tax court judgment, I go see my assessor. I want my assessor to initial every judgment that comes in. I want him to review it, make sure that the amount of the reduction of 119.3 is correct, okay? If we do issue a refund of $2,100, I want to make certain that this property, there's no delinquencies on this property for 2020. Are all of the taxes up to date? Are all the water and sewer charges up to date? I don't want to issue a refund check if there's still delinquencies on the account. So that's another thing that I do look at. The other important thing is the check should always be made payable to the attorney on behalf of the plaintiff. So make sure the check goes out to the attorney. And the last thing is the check should always be issued between the 45th and 60th day of the date of the judgment. So usually once I get that judgment, there's a date at the bottom left-hand corner, and I do make certain that the check is issued between the 45th and 60th day of the date of the judgment. There was a local finance notice that was put out back in 1996, CTC 96-1. It was a local finance notice, CTC 96-1 that kind of explains all of this. And I always do a resolution at my municipality. Anytime I cancel a reduced taxes due to a state tax court judgment, county board judgment, I always have a resolution passed by the governing body. It gives me a good audit trail. Okay, so that's the reduction. Now, how about the second calculation that we're going to take a look at was the refund on the interest on the tax appeal refund. And I just learned something new from Melanie yesterday. That's why these conferences are really important. As I have listed here, the rate of interest computed on a tax appeal refund is 5%. Interest must be calculated from the date of the overpayment, not the due date of the tax installment until the date of the tax refund, not the date on the tax appeal judgment. So if we had to compute interest, okay, Melanie had mentioned yesterday, I guess there was a change. I like to listen to the recording yesterday of the division update, but I think she did mention that this has been changed now. The floor, I believe, is going to be 1%, and I think it's tied into the prime rate. So I need to do a little homework on that as a result of yesterday's seminar. But the calculation we're going to do here is just if it's at 5% interest at this point. So the important thing here, gang, is if we had to make a $2,100 refund, okay, and the interest is going to be at 5%, we look back at the fourth quarter of 2019. That's when the overpayment occurred, okay? So last year I had to do an interest refund. I went back to that applicable year, see when they paid that fourth quarter tax, and we'll use that as the basis in doing our calculation. So if we're going to issue a refund on November 1st, 2020, we would count the number of days from November 3rd, 19 to November 1st of 2020. At $2,100 at 5% interest. And one of the nice things is we would use the tax collector's number of days calculation. So how would we compute the number of days? We wouldn't get out our calendar and just simply start counting days. We would use the tax collector's formula in computing the number of days. So if the refund's going to be on November 1st, and last time they came in to pay was on November 3rd, let's calculate the number of days. So the numerator would be 2020, 11 months, 1 day, and the last time they made payment was November 3rd of 2019. Let's calculate the number of days. So we can't subtract 3 from 1, so we got to borrow 30 days. We'll make it 31. That's good. But we can't subtract 11 from 10. We've got to borrow a full year. Okay, so we're going to make this 22 months, drop this down to 2019. This is 31. So right now, from November 3rd, 2019 to November 1st of 2020, would be 11 months, 28 days, 30 days in every month. 30 times 11 would be 330 plus the 28, 358 days. Okay, so to be honest with you, gang, this formula, I use this formula all the time for computing the interest on bond anticipation notes. If I have to do the calculation for interest on notes, if you didn't go out for a full year, I use the same formula because 30 days it's a negotiable instrument, 30 days in every month. Okay, so I use the same formula in computing the number of days for interest on bond anticipation. So the amount of the refund, $2,100 at this point, if it stays at 5%, that's what I have in this example. According to Melanie yesterday, that changed. I think the max would be 5%, the minimum is 1%, and something tied into the prime rate. I need to do a little research on that, and I need to do a little homework on that, to be honest with you, and see what the change is. So 2,100, 5%, 358 days divided by 360. So the interest would be $104.42. So I wanted to give you that example with a interest on that refund that we just made. Okay. And I figured the last thing I'm trying to center my calculation workshop all around taxes, to be honest with you. We all get county board judgments. Okay, so let's kind of talk about a county board judgment and see what the reduction would be. And I know many of these things are handled by the tax collector, but hopefully we're all learning something new. Okay, again, if we get a county board judgment in, first thing I do is go see my assessor. I'll say, hey, Rich, initial this for me, make sure the amount is correct. And in this case, suppose that Here's the individual's taxes for 2020 was $7,600. The preliminary amount for 2021, we know that. And suppose the reduction, his assessment was $152,000, and we got a county board judgment in for $112,800. I just made up numbers, to be honest with you. And the amount of the reduction was $39,200. I used the same tax rate at $5 throughout, just so we kind of just kept it consistent. So in this case, if we wanted to compute the amount of the reduction, all right, reduction in assessment was $39,200 divided by 100. Okay, would be 30 because it's based on $100 of assessed valuation times $5. Amount of the reduction would be $1,960. Okay, so normally in practice, what the collector would do would reduce the fourth quarter tax bill by the amount of the reduction. Here, the resident, they got a tax bill for $1,995. The reduction is $1,960. How about what I would do and what the collector would do, revise the fourth quarter bill, reduce it down to, and I'll show you the calculation in a minute. How about we reduce it down to $35, okay? So normally as I'm getting these bills out, and what the collector would do, get the bills out, how about reduce that fourth quarter bill by the amount of the reduction, okay? And usually what I also do is, as a collector, I would kind of make a copy, or I would print out the taxpayer's screen and send a copy to the plaintiff's attorney. Because many times, once you get these county board judgments in, what's the first thing to receive in the mail, gang? Normally, we would get a letter from the attorney to please send me the refund check. So normally, I would try to let the attorney know that, hey, there's no refund. I reduced their fourth quarter bill by the amount of the reduction. Okay, so I'm not issuing a refund check. Just one other thing I do want to point out from my own experience would be, and we'll get on to a tax rate calculation in a minute. My own experience is anytime we do reduce taxes, like in this case, we're reducing the fourth quarter bill by $1,960. The preliminary bill should always be one half of the previous year's levy. So since the new levy is new levy is $5,640, the preliminary tax bill would always be one half of the previous year's levy. So normally, in practice, what the collector would do would be to reduce the preliminary tax bill from up here, $1,900, which was originally generated, down to $1,410. Okay, so anytime I do get county board judgments in, we're required to reduce the preliminary tax bill for the upcoming year, because the preliminary bill should always be one half of the previous year's levy. Just one important thing, learn from my mistakes, gang. If there's any collectors out there, anytime you reduce a preliminary tax bill, make sure the assessor's aware of it. He needs to change it in the Mod 4 system. So when the duplicate comes out in the upcoming year for 2021, it's matching the tax collector's records. I remember years ago, I forgot to do that, and I just made the corrections in my tax screen, and I went on my merry way, and the duplicate had the higher amount of $1,900, and what happened then was when I generated the final bills for 2021, they were not correct because the system thought they were still at $1,900. Okay, so make sure if you're reducing preliminaries, make sure you let the assessor know about it. Okay, next calculation. How about we look at calculation of a tax rate? I just this is something that, look, I do each and every year, gang. I've been in Cedar Grove 37 years, and I'm a big proponent of estimated bills. I always get my governing body to pass a resolution first meeting in June, and by the end of June, the due date is June 30th. My tax bills for August are out mid-June. So if residents are going on vacation, going away, they've got their bills in hand. So I'm always doing this calculation. Up until this year, I think they put an Excel spreadsheet up on the division website, if I recall. I would do the calculation manually. So let's take a look at it. And I pretty much in practice you would know all the pieces of the levy except for the county. For me, where I work in Essex County, it's a crapshoot. So normally, I think this year, I estimated the county levy at about a 2.5% increase over the previous year. And to be honest with you, gang, I was spot on with it, okay? So, you know, again, we would have our county levy here. I'm estimating at, these are all estimates, $7,725,000. And if the assessed valuation in your community was $600 million, knock off 2 zeros because it's based on $100 of assessed valuation. So then what I do, gang, is I go down and I look at all the components. All right, so I know the county levy. I will estimate that. The county open space, I need to estimate. It's very difficult for me to get those numbers from the county when I'm doing my estimate. I usually call the board secretary. I know what the school levy is going to be. Okay. Fire district, if you do have a fire district, you'll know that levy in February. I kind of here just combined my local levy together, which would be the library and the amount to be raised. Let's say that's $4.3 million. And open space, $120,000. So I'm footing down, gang, my levy, and I'm kind of doing the calculation on each of the components individually. Because we, again, remember we go out 3 places to the right in computing the tax rate. So I would actually then foot down my rate, and I come up with 4.507, okay? And I always do a little bit of a proof of the levy at this point, because I want to make certain that I'm raising enough of money to cover the agency total levy amount. Because, gang, what I'm trying to highlight here is you can't round down all of these numbers. Because if you're going to have breakage going further out, you can't round down. You've got to make certain that I'm raising enough of money to cover my total tax levy. So here as I foot down, I'm coming up with 4.507 as my rate. And if I multiply it by assessment, and usually the assessment is $600 million, I knock off 2 zeros because it's based on $100 of assessed valuation. And if you notice here, well, we're raising, as I'm estimating, $27,042,000. So here, this is the breakage. Usually if you hear breakage on the tax rate, the breakage here in this example is only $2,000, okay? So we're okay with that. We're fine with that. Just kind of want to go over how to compute a tax rate calculation. All right, how about, this will take a quick calculation. Many times, if we have to compute one tax point, many times, you know, in practice, I'm always concerned with what is one tax point worth? Meaning, you know, if your amount to be raised by taxation goes up by X amount of dollars, how much impact will that have on the average assessment of the home in your community? So, you know, you can do it a number of different ways. If you take your assessed valuation, which was $600 million, you can either divide it by 10,000 to come up with 1 point, which would be 60,000. Usually, gang, what I do in practice, I take the assessment, divide it by 100, multiply it by a penny, and to me, that's what one tax point is worth. So I know if I'm increasing my amount to be raised by $60,000, the tax rate's going up 1 tax point. So on an average home that's assessed for $200,000, their taxes would be going up $20. So I kind of, many times I'll get a call from students, how do we compute 1 tax point? So that's pretty easy. I usually just take the assessment, divide it by 100, multiply it by a penny, okay? So we know how to compute 1 tax point. Next thing is, how about, I know we all love to do the reserve for uncollected taxes, so how about we go through that, and I think the key thing that I'm trying to highlight here is the local finance notice. It was MC 97-1, MC 97-1. That was put out back in April 16th of 1997, where we can do a 3-year average in computing the reserve for uncollected taxes. So I know many of you probably, hopefully, do this each year in practice. I believe this past year it was on the part of the financial statement Excel workbook. Here I just made up an example. So even if we had to do it, we would have our actual rates for school, county, fire district, which would be special districts for 2020. Suppose we had an estimate. I just made up these numbers. Obviously, they're more than 2%. But I computed the estimate. I was just looking to come up with round numbers. Suppose the school levy was 60 million, county was 6.5 million, fire district $800,000. Okay, our anticipated revenues would be right from the budget document. Surplus anticipated, miscellaneous revenues anticipated, and received from delinquent taxes was $6,650,000. And our budget appropriations would be right from the budget document, $8,202,000. So really what we need to do is estimate our amounts. Revenues would be right from the budget document. The appropriations would be from the budget document. And what I decided to do here, gang, was because I was really concerned about what our percentage of collections might be this year. At least if you listened to Melanie yesterday on the division update, there really wasn't any kind of a big decrease in tax collection in the second and third quarter. I was really pleased to hear that. I think the TCTA put out a survey, which I kind of filled out for Cedar Grove and sent back. But what I was trying to highlight here was, suppose our 2019 percentage of collection was 98%. We had a real drop off to 94% due to people not paying, the unemployment rate being up, different variables. So we're going to kind of do the RUT two ways. We'll do it kind of the traditional way, where we would use 94%, or we can use 94% or lower, or we can do a 3-year average. So how about we look at 94%, gang? How about we look at 94%? So at this point, and again, make certain, even though many things are on the financial statement Excel workbook, review the numbers on the workbook. I know I have to admit, I had to send an email to the division. I wasn't able last year enter the estimated amount on the estimated line. I had to send an email to the division because I only could put it on the actual line, and they did correct that for me. So if you do find any, make sure you understand the form, so when you're reviewing it, if there's any glitches, send an email to the division, because my cell was protected. Not sure why, but it was corrected. Okay, so let's quickly go down. We have the budgeted amount was $8,202,000. And then we have our estimated amount for school, county, special districts. We come down to line 8, which would be $21,502,000. And we'll subtract the estimated revenues. That's right from our budget document. Item 5 off our budget document. $6,650,000. We come up with the balance to support the budget, okay, which would be $14,852,000. And we divided by our percentage of collection. So in this example, we're going to use 94%. Okay, if we divide line 10 by 94%, we come up with $15,008,000. Again, the difference between 10 and 11 is the reserve for uncollected taxes. So the difference between 10 and 11 is the reserve, $948,000. Okay, so we kind of do our little proof down below. These all come from the numbers up above. The appropriation was $8,202,000 plus the RUT. We come down to a subtotal of $9,150,000. We subtract the anticipated revenues from line 9 up above, and we come up with the amount to be raised by taxation of $2.5 million. Once you know this number, gang, what we're going to do is we just slide it up here to tax and local budget. And what we'll do is foot down all the indented amounts, pull the numbers from up above. We come up with $15,008,000, and we make sure that agrees with line number 11. So I think many times, many of us have done the RUT before. I just wanted to highlight this. So how about keeping an eye on the time? Suppose we do a 3-year average. And again, the important thing is, if you do a 3-year average, it has to be approved by resolution of the governing body prior to the introduction of the budget. So you can do it the same night that you're introducing the budget, but you need a resolution. So what I did do, gang, was here, I did provide a sample resolution that I'll include up in the packet. That'll be up on the GFOA website. You know, my town is here, the Township of Homersville, and basically the governing body, just to expedite, will be doing a 3-year average of the percentage of collections, which in this case would be 96%. Okay, so suppose we did the resolution, going to do a 3-year average. We don't want to use the 94% gang. So let's see what the impact would be. The numbers up above obviously would be the same. And we work our way down. And rather than using 94%, we're going to use 96%. And again, keep an eye on, what your percentage of collections. We're going to do the percentage of collections in a second. Okay, so keep an eye on that, on what your percentage might be. And we're going to talk about that in a minute.
Bill, can we jump in for a poll question real quick?
Go for it, Jerry. Go for it.
All right, I want to make sure everybody's listening.
Can I answer? I'm not allowed to answer. Okay.
Analysts can't answer, but yeah, we could do it earlier, or we used to do a happy hour session too. They were awesome.
We used to do it 8:30 at night. But
Yeah,
Jerry,
the happy hour session.
yeah, the problem was everybody wanted an open bar at the Twilight seminar. So that was one of the requirements.
Absolutely.
Okay.
right. Let's get back.
Okay, good. So suppose we're using what? I don't like 73% said no. Come on. What are you going to do? Sleep? Let's go. It's time to get up. Anyhow, suppose we use 96% rather than the 94. So again, the difference between 10 and 11 is our reserve for uncollected taxes. So in this case, here, gang, where the other example, it was our RUT was 948,000 using a 3-year average. RUT would be 618,000. And again, you can use 96% or something less. You're not locked into the 96%. Again, keep an eye on your reserve for uncollected taxes. It's a non-spending appropriation. It's a way of regenerating our fund balance at year end, okay? Because we make the journal entry. Debit the budget for the reserve for uncollected taxes, credit the amount to be raised by taxation. So, just keep an eye on it. I try to, in Cedar Grove, if you looked at my budget, we've been consistent at $560,000. Every year I go for that target amount in my reserve for uncollected taxes. So just be aware we can do a 3-year average on that, okay? So continuing on, keeping an eye on the time. How about, at this point, how about we do percentage of collections, gang? Let's do I made up an example doing percentage of collections. And what I try to do is I just threw some numbers out here, and I try to do this like color by number, where each one of these numbers would fall directly on a specific line on the financial statement. Usually what I do, gang, is the percentage of collections in practice. I try to do this in early December. I want to know what my percentage of collections is going to be in early December, because if I'm not really happy with the percentage, I try to go send out those reminder notices a few times in December. Try to get those collections in, because anything you can collect, gang, that's going right through the amount to be raised by taxation. It's going to increase your percentage of collection, going to help your fund balance. So how about in this case, gang, the levy was 20 million, credit assessments $500,000. So our levy was 20,500,000, and these were our credits. And I kind of gave you the line numbers that each one is going to go on its applicable line on the form. We'll see that in a second. And suppose the prepaid was 200,000. We collected 18,820,000 during 2020. And we had the net amount of the seniors and vets of 175,500. Gang, always remember the first 3 components is always the cash in computing our percentage of collections. Prepaid, cash collected, net amount of the seniors and vets. That is all cash in determining our percentage of collections. And the senior citizen vets, that would come from sheet 23 on the financials. So normally we would do our schedule of from state of New Jersey for the seniors and vets, come up with the net amount, bring that forward to sheet 22. But here I gave you that amount. We had current year taxes accrued to liens of 150,000, and we had cancellations of 400,000. Now, again, what we're going to do is we're going to do it 2 ways. Okay, and again, in accordance with the local finance notice that came out back in 1997, MC 97-1, we'll do it the traditional way with the cancellations on line 8. And what we can do is, again, by resolution of the governing body, we can move those cancellations from line 8 up to 5B. Again, it has to be approved by resolution of the governing body prior to the introduction of the budget. I think I've done this once in practice. Lately, knock on wood, our county board judgments have been small in Cedar Grove. I just left them on line 8. It wasn't worthwhile for me to move them up to 5B, and we'll see what the impact would be. Okay, so how about we'll take all these numbers and let's see what our percentage of collections would be. Let's do sheet 22. So we're doing all these calculations, and again, I mentioned, gang, I would do this early December. I want to see what my percentage of collections is going to be in early December. Why wait to the end of January, early February? I want to see where I'm at in early December at this point. So, in the example I just gave, we had the levy was 20 million. We had added assessments of $500,000. Okay, so we're footing down. Levy was 20,500,000. Okay, we come down to 5C. Total levy 20,500,000. Transfer to liens 150,000. Cancellations is 400,000. So we're going to do a traditional way. We're going to show the cancellations on line 8. In the next example, I'm going to have a resolution where we're going to move those cancellations up 5B, and we'll see what the impact would be. Cash isn't changing because prepaid was 200,000. Cash collected in the current year was 18,820,000, and the net amount of the seniors and vets, this number would come directly from sheet 23. So that's why I always do sheet 23 first, bring that number forward here. But to just kind of save time, I just gave you that number, gang. We would foot down all the credits, line 6 through line number 10. So I wish they would kind of do this like your tax return. Total credits, line 6 through line 10. That would be 19,745,500. And we come up with our total receivable at the end of the year of 754,500. Again, to do our percentage of collections, okay, item 10 divided by item 5C. So our calculation, we would take the total cash, 19,195,500, and we would divide it by our total levy, which was 20,500,000. So here in this case, our percentage of collections was 93.63%, okay? And I guess the key thing I just want to highlight on this form would be, we always bring the total cash that's reflected on line 10. Total cash was 19,195,500. Those were the 3 components: prepaid, cash collected in the current year, seniors and vets. We bring that total down below. We didn't have any state tax appeals pending where we want to pull some money out and put it into a reserve account. And this number would go directly over to sheet number 17, which is called the allocation of current year taxes. That's the amount to be raised by taxation. That's where we're realizing the current year tax revenue. So here, gang, next thing I want to try to highlight here is we're at 93.63, okay? So what I decided to do was, we just did that calculation. I'll skip over that. I kind of included a sample resolution for the Township of Homersville that I would have the governing body adopt prior to the introduction of the budget, allowing the municipality to subtract the cancellations of 400,000 directly from the total gross levy, giving us a net levy of 20,100,000. And you're going to see in a second, that's going to give us a percentage of collections of 95.5%. So let's go to that schedule. And hey, the financial statements are fun. This is that's why I teach the financial statement class. I get a kick out of it. This is bringing the whole year together. Bringing it together, doing your own financials. It's not too hard to do, gang. We should all be doing our financial statements. You got a good general ledger up to date, gang, really, doing the financial statements is a breeze. So here, let's see the example number 2 that I have, where the levy was 20 million, plus the added taxes of 500,000. All right, we're coming down to 20,500,000, just like we did before. Rather than showing the cancellations on line number 8, these are county board judgments, gang. Okay, so rather than showing the cancellations on late, let's move them up to 5B. The net amount is 20,100,000. Lien amount would still be the same, 150,000. Again, always remember, once there's a municipal lien on the property, all the current year taxes accrue to municipal liens. So we're accruing all those 2020 taxes to our municipally held tax title lien certificates. Okay, so at this point, cash isn't changing. Prepaid, cash collected in the current year, Net amount of the seniors and vets, that's not going to change. That's still 19,195,500. Our receivable at the end of the year is not going to change. That's at 754,500. That's not changing. What will change, gang, is when we do our percentage of collections. We're going to take the total cash, not the total credits. I know I have this on my final exam in my financial statement class. I can't tell you how many students pick up the total credits divided by the levy. It's the total cash divided by the levy. So our cash is 19,195,500 divided by our levy, which is 20,100,000. So we just increased our percentage of collections from 93.63 to 95.5%. So again, you can use something 95.5% or less. So normally, gang, usually your financial statements are due February 10th. Normally, I would show it up on 5B, submit them to the division, and then in March, when we introduce our budget, I would have the resolution done at that time. If the governing body decided not to do the resolution, I would send to the division a revised sheet 22. So I would initially, in practice when I've done it, I've been showing it up on 5B, and when we introduce the budget sometime in March, I would have the resolution passed at that time. So that's the way I've been handling it in practice. I don't know how some of you have been handling it, but that's the way I have been handling it. So just keeping an eye on the time, the amount that is going into our allocation of current year taxes, which would be the amount to be raised by taxation, that's on the bottom of sheet 17, would still be the 19,195,500. Okay, so we're good with that. Okay, let's move on, gang, to about receipts from delinquent taxes. This is probably one of the most toughest schedules in the financial statement. Sheet 26 is one of the really tough schedules to do, receipts from delinquent taxes. I do have to admit, it's one of the more difficult schedules in my own mind as far as doing, but the receipts from delinquent taxes is a very important schedule. Sheet 26 of the financial statements. We're going to do it together. This is where we come up with the third revenue category in our municipal budget. Always remember, your municipal budget has 4 revenue categories: surplus anticipated, miscellaneous revenues, receipts from delinquent taxes, amount to be raised by taxation. Those are the 4 revenue categories in our municipal budget. The third revenue category, receipts from delinquent taxes, comes from sheet 26 of the financial statements. This is where we're coming up with the maximum amount that we can anticipate as a revenue for receipts from delinquent taxes. Okay, so when I'm working on my budget in Cedar Grove, when I get to receipts from delinquent taxes on my budget document, I'm pulling out my financial statements and I'm looking at sheet 26. That's where I'm pulling the number from. So let's go down together. I drop down some numbers and I try to do this color by number, if you will, what lines these numbers will fall on sheet 26. So I try to make this as easy as possible. So when we do receipts from delinquent taxes, we're looking at all the prior year delinquencies. All the prior, we're not looking at anything with the current year other than the year-end amount. So let's see what I've got here. Let's drop it on the form. We've got about 10 minutes left. Let's see if we can get this in. So we have our opening balance in the receivable was $590,000. These were 2019 receivables. We're looking at all our prior delinquencies. Omitted was we added taxes to it of $20,000. It was decreased. We had $577 in cash. We had the annual tax sale where $14,000 was struck off to the municipality. That's good. It's going to go on its own line, 6A. And I threw in $1,000 in cancellations. So our receivable at the end of the year was $18,000. Okay. And we're looking at all prior delinquencies. So we're also looking at our tax title liens. Lien amount at the beginning of the year was $122,500. It was increased by our tax sale. It was the $14,000 coming up from the 19 taxes into liens, 14 grand coming down. Interest and costs were $2,000. That's going to go on its own line 11 on the form. 20 taxes accrued to liens. That would tie into line 6 on sheet 22. We just seen that. That would go on line 12. Cash collected, $120,000. And our lien amount was $168,500. And we have to remember what our receivable was for 2020 taxes. So let's drop this on the form, gang, and we'll kind of go through this quickly. This will be up on the GFOI website. This is doing sheet 26. Okay, so again, kind of going down, and these would come from all the numbers that I just showed, laid out on the last transparency, if you will. Opening taxes were $590, tax title liens $122.5. So our opening receivable was $712,500. Working our way down, we did have a cancellation of $1,000. Okay, we did have added taxes of $20,000. So here, anything that we add to our opening levy would go on line 4. Not that often do we have cancellations, but if we do cancel any prior year taxes, we get listed there. And we work our way down the form. Line 6A and 6B would be taxes transferred to liens other than the current year. So these would be taxes that were transferred to liens as a result of the annual tax sale. Other than the current year was $150,000. These were $14,000. Okay, that was transferred. 6A and 6B will always be the same amount. Okay, so what we're trying to do here, gang, is put down all our debits. Would be $746,005. Bring that over to the credit column. And what we're going to do is squeeze into line number 7. Remember that from the financial statement course. So when we add down all of our credits, we're footing down to $746,500. Once you know line 7, bring it down to line 9. I wish they would put here, balance brought down from line 7. Balance brought down from line 7. That's our revised receivable, $731,500. Okay, so that's, in a minute, we're going to be using that in determining our percentage of collections. Cash collected, I just laid that out. So I look back and see what I realized in prior taxes, $577. How much did I collect in tax title liens being redeemed? $120,000. So we collected $697,000 out of a possible $731,500. Gang, you can almost picture in your mind's eye a percentage of collection. We collected $697,000 out of a possible $731,500. We'll be doing a percentage in a few minutes. We work our way down. Important, they're going to want to know the interest and costs on our 2020 tax sale. So when these liens were struck off to the municipality of $14,000, the interest and costs were $2,000. So you have to get these numbers from your tax collector. Okay, very important. So the interest and costs on the 2020 sale was $2,000. 2020 taxes transferred to liens was $150,000. This would tie into line 6, sheet 22. Line 6, sheet 22. And our 2020, I wish they would say here 2020 taxes receivable. 2020 taxes receivable. This would be line 12, sheet 22. So this was your 2020 taxes receivable at the end of the year. Okay? So these numbers, if I can really just flip up really quickly, this was our receivable at the end of the year, line 12, $754,500. And what was transferred to liens was $120,000. These two numbers would agree. These line 6, line 12, sheet 22 would agree with on sheet 26, line 12, line 13. These would tie in directly to sheet 22. So just kind of working our way down, gang, percentage of collections. Item number 10 divided by item number 9. So we would take $697,000 divided by our revised receivable of $731,500. Our percentage of collection would be 95.28. And what we would do is we would multiply it by the amount on line 14. Line 14A would be all of your taxes delinquent at year end. This would be 2019 taxes and 2020 taxes. The example that I gave was the 2018 taxes were at $18,000 at year end. Our 2019 taxes were at $18,000. So the 2019 taxes were at $18,000. 2020 taxes were at $754,500. They would be added together and reflected on sheet 14A. All our taxes. Okay, so you would take your percentage, multiply it by your receivable at year end. This would represent the maximum amount that we can anticipate for receipts from delinquent taxes. Okay, so I look at when I'm working on my budget document, I'm listing their receipts from delinquent taxes. I'm looking at sheet 26. This would be the max. So I've got about 4 minutes left. I just want to mention, I wouldn't use the maximum amount. I usually look at my taxes receivable at year end. I would be closer to 772.5 because I don't want to have a deficit in revenues in my receipts from delinquent taxes. So I'm kind of closer to this amount at year end. Okay, so I know that's a lot to go through in a short period of time. Okay, my last calculation, gang, I've got 4 minutes, and my last calculation really doesn't do with taxes. Was I pulled this down off the division website, emergency appropriations. I don't know, depending on whether we might do emergency appropriations this year, but don't always remember your emergencies are limited to 3% of your operating appropriations. So this calculation, I pulled directly off the division website. If you go on the division website, there's a link there for emergency appropriations. Thing I just want to highlight here is with the emergency appropriations, you're limited to 3% of your operating appropriations. So if you're looking at your operating appropriations, if it's an emergency and current fund, 3% of your operating appropriations is based on the prior year budget. If you're doing 3% of your operating appropriations for your utility, you use your current year operating appropriations. So in this example, this is off the division website, our operating appropriations for the prior year was a little over $7.4 million. And if we were doing 3% of our operating appropriations for a sewer emergency, we use the current year operating appropriations, and we add to it the utility operating appropriations. So where I'm at in Cedar Grove, I have 3 utilities. I add all 3 of my utility operating appropriations to it: water, sewer, and swimming pool. So this is the calculation that, just to highlight for cap purposes, if you're doing an emergency in current fund and you're needing to compute your 3% of your operating appropriations, use prior year appropriations for the current fund only. So we would take the 7.4 million times 3%. That would be a little over 223,000. If we were using 3% of our operating appropriations for a utility emergency the current year, use your current year budget for both current and utility. So here again, current was little over 7.6 million. Our utility was little over 2.7 million. We're at 10.4 million times 3%. Our operating appropriations would be at $313,346. So I wanted to also include that in my calculation workshop. Luckily, knock on wood, I haven't done an emergency in the last number of years. We've been, we keep an eye on our budget, and knock on wood, I had nothing out of the ordinary there. So we hadn't had to do any emergencies in Cedar Grove for the last few years. But I just wanted to highlight here, gang, and we're coming up on 9:20 here, and maybe we can open up some questions, if you will. Just keep an eye on the calculation on your operating appropriations. So let's see if we have any questions.
Really don't have time for questions, but one person asked if we give an example, a new way to compute interest. I think they're talking about the change in the legislation on the tying it to the prime.
Be honest with you, Jerry, I don't know. I just don't know. I need to study that myself. I know there was that $10,000 threshold. I know, Denise, I'm not certain, to be honest with you. I don't know. I should know, but I'm not certain of that. I don't know that calculation right now. I'm really concerned, to be honest with you, is this going to require some kind of a computer enhancement? That's the thing in the back of my mind. With the $10,000 threshold on interest on delinquent taxes. So at this point, I'm not certain, Denise.
Okay.
I don't know, and I'm being honest with you. I just don't know.
The presentation will be on the website.
Oh, definitely.
Someone's asking about a reverse tax appeal. Would you enter this on sheet 22? 30 seconds.
I would probably think yes, because you increased your levy at this point. Maybe if it's a county board judgment where the county board judgment came in increasing the assessment, you've got to account for it as part of the levy. So I would imagine so, Karen. I would say yes to that because you increased your levy by appeal that came in that increased the levy. I probably haven't seen one in a while, to be honest with you. Oh, okay. John Reinhardt had said, yeah, nice to see Bill stumped. Okay. Look, I'll be the first thing, gang. I have to admit, I've been doing this, God, 6 years as an auditor, 37 years in Cedar Grove. And I have to admit, gang, I don't know everything. I'll be the first to admit.
Bill,
I'm like anybody else. Look, even listening to Melanie yesterday, to be honest with you, I really would love to. I plan on watching that again. That thing was chock full of information, and there was a lot of things. Look, I just did my example with the interest on the tax appeal at 5%. I learned from Melanie yesterday, well, the floor is going to be 1%. It's tied into the prime. So many things are changing. You just have to. That's why this forum is great. We learn a lot, and things are always changing. That's why you've got to see. You got to stay on top of everything. So definitely, this whole after the conference, this whole it's not a PowerPoint. It's just kind of put all my calculations together. I create a PDF, and that's kind of I share the document, and that's kind of the way I did it. But let's see if we got any more questions coming in.
We're definitely out of time, but I want to be selfish and throw my own in there in defense of the other 20 counties. Call your for your calculating the county taxes. Call the county CFO. They know by the time they introduce their budget in February what the impact is on each town, and certainly by June those numbers are done. So I'm not sure why you can't get good numbers out of your county, but don't want people to believe that the counties don't have that information.
Okay, no, I appreciate you sharing that, Jerry. I know usually it's been difficult for me in Essex County to get that number, so I've been just increasing it by 2.5%. Yeah, luckily, I know we're running out of time, but I was spot on. In Cedar Grove, our rate was 2.495. The actual rate came at 2.497, so I was like spot on with it. But I appreciate you sharing that, Jerry, and I think maybe
the county commissioners, formerly known as freeholders, they won't adopt the budget unless they know how it impacts each of the towns. So anyway, we're way past our time.
Okay, Jerry.
Once again, excellent job, Bill. Great stuff. Maybe we can use some of this for the next CFO exam. I don't know.
I appreciate you. I just hope everybody got something out of it. And I was just a little disappointed to see 73% said they don't want to see this any earlier. So,
well, they don't want earlier, but maybe they want longer.
All right. Well, hey, I'm game for that. So, hey, I appreciate you guys. The GFOA asked me to do the early bird. I enjoyed doing it. And Jerry, thank you for asking me to do it. I do have fun with it. No question.
All right. We'll see everybody in about 5 minutes. Bye.
Okay, gang. Thank you so much.